Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading session. Post forming a piercing line candlestick pattern on Friday, Nifty began the week on a strong note. The index witnessed consolidation in the first half of the session and gained traction towards the close of the day. The index closed at the highest levels, gaining 0.86% for the session. All the sectorial indices ended the day in the green, with Nifty PSU Bank and Nifty Consumer Durables emerging as the best performing sectors with gains of 3.07 and 2.4% respectively, while Nifty Metal and Nifty Media were relatively the weakest sectors for the day, witnessing gains of 0.25% each. From the global equity market perspective, if we see, coming to the macros first, the DXY is sustaining around levels of 106, while the US 10-year yields are at 4.6, which is a bit of concern. The positive thing is Brent crude prices have dipped from $91 a barrel to levels of around $87 a barrel, which is a welcome sign. S&P 500 post correcting nearly 5 to 6% from levels of 5,264 is approaching a key support level placed at 4,940 4,970 zone. Hence, we feel the downside in S&P may not be severe from here on, and hence some consolidation in global markets may be witnessed. Coming to Nifty, going ahead, support zone for the index will be as seen at 22,270, 22,250. Until the time this holds, we can see the index move towards 22,480, 22,510 levels. Any sustainable move below the levels of 22,250 will lead to selling pressure in the index towards the mark of 22,120, 22,050 levels. While on the upside, any sustainable move above the gap zone of 22,510, 530 will lead to an extension of the pullback rally towards 22,650, 22,680 levels. Coming to the OI data, so Nifty PCR if we see is currently at 1.07 with meaningful call writing witnessed across 22,400, 22,500 strike, while on the put side it is witnessed in 22,300 and 22,200 strikes, implying the range for the coming few sessions could be 22,250 on the downside and 22,530 on the upside. Coming to Bank Nifty, so going forward 47,700, 47,600 will act as a crucial support for the index, and any sustainable move below the levels of 47,600 will lead to selling pressure towards the mark of 47,200. While on the upside, the zone of 47,200, 47,260, 48,200, 48,260 will be the immediate hurdle for the index. Any sustainable move above the levels of 48,260 will lead to a sharp pullback rally up to the mark of 48,500. Coming to the OI data for Bank Nifty, so if you see Bank Nifty PCR is currently at 1.02. Significant call writing is seen in 48,000 strike as well as 48,200 strike, while on the put side it is mainly seen in 47,500 and 47,800 strike, so implying a broad range of 47,600 on the downside and 48,300 on the upside for the coming few sessions. Coming towards stocks and sectors in momentum, from the broader market if we see, counters such as Concor, Cummins, Dixon, Eicher Motors, Whirlpool, Escorts, Havells, ICICI Bank, LIC Housing, Motherson Sumi, Crompton, these are the counters which look good based on technical parameters as well as the relative strength chart. Coming to the FII/DI data, in the cash market, FII sold to the tune of 2,915 crores, while DI is bought to the tune of 3,542 crores. FII long short ratio for index futures is at 34.05 on a net basis, this as they sold about 5,901 index futures. On the stock futures front, FIIs have bought to the tune of 41,333 contracts, while on the options front, FIIs sold 53,337 call contracts and they sold 1,05,928 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.